Being able to read candlesticks is the most important skill to master as a trader, because before applying any type of strategy or indicators on the charts you must first learn to read candlesticks. Which is why in this video I will show you how to read candlesticks, and not just any candlesticks but the most profitable candlestick patterns. Let's start by defining what is a candlestick. A candlestick is an instrument that gives you a visual representation of what price did in a specific time period. That is all. Now let's look at a candlestick. Every candlestick, no matter the color, it can be green, red, or in this case white and black, has an opening price, a closing price, a high and a low, which is the highest price the candle went and the lowest it went. Now let's look at what makes a candle white or black. For a bullish candle, which is white in this case, the candle opened, then created the low, and then went to create a high, then finally it closed above the open, which shows us that there was buying pressure for that time period, which is why it is white. The same applies for the black candle, which is the bearish candlestick. It also has an open, high, low, and finally it closed below the opening price, which indicates there was selling pressure for that specific time period, which is why it is black. A normal candle has a body and shadows. The colored part is known as the body and the upper and lower parts are called shadows. Not every candle will have these factors, but a normal candle will have an upper shadow, a body, and a lower shadow, as we can see from this example. Now let's look at long versus short bodies, what it actually means. As we can see, even if a candle is long or short, it also has a shadow and a body. What do short bodies mean? Short bodies also have the same characteristics of the previous examples, but the only difference is that they indicate that the pressure from the buyers or sellers was not that strong, or the pressure is almost ending. While long bodies on their end just mean that the buying or selling pressure is a lot. Not to dwell too much on this topic, as it is just that simple. Now let's move on to longer shadows. There are two types of longer shadows. We have upper shadows and lower shadows. For longer upper shadows, it simply means there was buying pressure on the markets, but then price reached a high price where a lot of sellers were present, and then they pushed price lower, hence the body is small, showing us that the buying pressure was ending or not that strong. Same applies for longer lower shadows, meaning there was selling pressure present in the markets, and then they reached a level where there was too much buyers and those buyers pushed price higher, hence the body is small, showing you the sellers were losing power. Now this candles can be any color. All that is important is to spot the shadow. Now that we understand the basics of candlesticks, let us look at the most profitable candlestick patterns as promised. First, we have the bullish engulfing pattern. In order to spot this candlestick pattern, you need two candles, one with a small body of the opposite color and a different one in the different color. You can spot these candlesticks at the bottom of the trend, signaling a reversal, or in continuation, signaling a continuation of the trend. Just like I said, you need two candlesticks, one small bearish candlestick showing that the momentum is ending and one bullish showing that now buyers are in the market taking over. Now this is an example of what you can expect to happen when the market gives you a bullish engulf on the charts. This is a strong signal that the market will go up. Now let me show you an example on the real charts what it will look like, as the market is not as perfect as the example. As you can see, the first bullish engulf took the market high, and then a second one appeared, then it went even higher. But first you must really train your eyes to spot this type of pattern before trying to place trades on them. Just open your chart and spot how many times they appear in a given week. Then come back and comment your results. Next we have the bearish engulf. It is just the opposite of the bullish engulf, but you find this at the top, signaling a reversal to the downside. I won't waste time defining it, but as you can see, this is what you can expect from the markets, and now this is the actual example on the charts, as we know the charts are not that perfect. As we can see, the markets goes directly to the downside, which is why I want you to learn spotting these patterns, as with them alone you can make your trading better. Now moving on to the next pattern, we have tweezer tops. They are found at the top of market structure, signaling a reversal. You spot tweezer tops by having similar candlestick sizes and upper shadows that are almost equal. This indicates buyers handing over the market to the sellers, and then the market falling strong after this pattern. Let me show you an example on the charts. As you can see in this example, what the market did immediately after the pattern, it went straight down. Now let's look at the opposite of the tweezer tops, which are tweezer bottoms. We find these mostly at the bottom of the chart, signaling a reversal to the upside. They do exactly as the tweezer tops do. Let's look at the live example on the charts. As we can see, the market went straight up. I won't waste time explaining it over again, as it is the same as tweezer tops. Feel free to ask any questions in the comments below. If there is something you don't understand, I will answer all your questions. Next on the list is a hammer candlestick pattern. You find these at the bottom of the chart signaling an exhaustion from the sellers, just like the example of long shadows. When this candlestick appears on your chart, you should be expecting buying pressure from that moment, as the buyers are really entering heavily. Look at this example on the charts. As we can see, the market shot up immediately after the hammer. Now the opposite of the hammer, which is the shooting star, they are found at the top of the market structure, especially at resistance areas signaling strong selling pressure coming in the market. When you see this type of candle appearing on your chart, make sure to start selling, as it indicates a lot of sellers in the market. As we can see, reading candlesticks and understanding what they mean can have a huge impact in your trading. I hope you will practice spotting these patterns and make sure to master them. This is only part 1 of the video. Make sure to subscribe to the channel, as I will be posting part 2, as there are still a lot of profitable candlesticks we have to cover. So in order to get notified, please make sure to hit the bell icon, as you will get notified the next time I post. Stay tuned, guys. I'll see you on the next one.